Hey there, Jen Blanchard, Berkshire Hathaway Home Services, New Jersey Properties, coming to you from my office in Basking Ridge. Today's question that I'm going to answer in this video is one that is asked by buyers. But I'm going to address buyers and sellers here because I think it's important for sellers to understand the concerns of their potential buyers. So here's the question. And first, I'm going to just full disclosure here. I sell houses. I don't sell loans. So I can't speak very specifically about mortgages, but I can talk about the process and what you may need to share with your mortgage rep in order to get pre-approved. And yes, it is important to get pre-approved, hopefully before we get in the car and start looking at properties. Just saves everybody a whole lot of time. And even if you know it's not going to be a problem, I agree with you, it's probably not going to be a problem, but it is important to have that conversation prior to spending too much time looking at houses that either won't meet your needs or won't fit in your budget. Okay, so here's the question. Do I need to have 20% down in order to buy a house? The answer to that question is no. Now again, remember my disclaimer. I can't speak specifically to you and your scenario and your qualifications or your credit score, your loan to value ratio, etc. A mortgage rep can do that for you. But what I can tell you is you do not need to have 20% down to write an offer on a property. So the lower that number is, the less money you put down, it's kind of directly or inversely proportional to how solid and how strong your offer is. Sellers definitely like to see 20% down, especially if they haven't bought or sold a property in a very, very, very long time. In recent years, it's become a lot easier to get a mortgage. Some of those processes have definitely been tightened up in order to protect the housing market. But the days of requiring 20% down are pretty much over. You can buy a house with as little as 3% down and still be solidly qualified, okay? Let me also spend another second or two here saying that where is that deposit? Where does that deposit go when you're buying a house? That money is held in escrow. You make those down payments in 3 different times, right? With your offer, you typically present a good faith deposit. $1,000, $5,000, it just depends on the property really. And then once your offer is negotiated and accepted and you're under contract, you have another week or 10 days to provide another portion of your down payment, and then the balance gets paid at closing. So if you're putting 20% down in a perfect world, you put 10% down up front, you put 10% down at closing, and you mortgage 80%. As we already know, it's not a perfect world. If you were putting down 10%, if you could put down 5% up front and then 5% in the back, that's great. The more money you can put up front, the better off you're going to be because the stronger your offer will be. Somebody looks at that portion of your down payment, it's called a deposit. Somebody looks at that deposit and says, okay, is this a number that's big enough to hold this buyer to the deal, right? It's really the money that you have at risk for if you breach the contract, right? So, you get a job offer in California and you decide to move, well, you may kind of say, well, I'm only going to lose $1,000, right? But nobody is going to back out of a deal in a way that's not accounted for in their contract and lose, $10,000, $50,000, $25,000. It's a big chunk. So it needs to be enough to show that that you've got some skin in the game so that the seller understands that you are really serious, okay? So that's a lot of words for, I went 4 minutes. That's way longer than I usually go, but I hope I answered some questions. If you have any more questions, please give me a call. I'm happy to help. Talk to you soon.